Welcome back. So cues are mixed across Asia. Let's get the implied open up on the screen as well. We've got some of the markets like Nikkei that are under pressure, but some of the others are not that bad. And we are quite flat with a slight positive bias. So let's see if this is how indeed it plays out. Let's talk about stocks, and there are plenty to track this morning as well. Our team is standing by with the CNBC TV 18 list of top stocks to watch. Mangalam told us that FMCG is definitely going to be on the radar this morning for lots of very sensible reasons. So let's start off with the FMCG big boy. No ice creams for Lever, Mangalam.
No ice creams for Lever? Not necessarily. It is a fair amount of ice creams for shareholders of Lever separately. So all those Magnums and Quality Waltz ice creams that you enjoy, you will continue to enjoy it. Instead of it being housed in Hindustan Unilever itself, now it will be listed separately. So, this has been something that has been going on for a very long time. After the end of the second quarter as well, the management said all options are on the table, and now we know which option is the one that they went for. Scheme of demerger will now be placed in front of the board and shareholders early next year. Shareholders will get shares in the ice cream business in proportion to the holdings in HUL itself, so no problems with regards to the shareholding pattern as well. Ice cream business accounted for nearly 2% of their sales and has mid to high single-digit profit margins. Now, in Unilever's scheme of things, 2% of their sales is not as much, but 2% of Unilever's sales also is a fair amount. So, basis the current contribution and growth, the ice cream business could anywhere be between 50 to 60 rupees per share of a Unilever share. Again, not much in terms of Unilever's overall scheme of things, but separately listed Unilever ice cream business could well command a market cap of over 12 to 14,000 crores.
Which it's not in particular sold right now.
It's not sold. It's just
separately
separate
listing.
listed. So yes, ice cream is not going out of Unilever physically, but yes, on the stock exchanges, yes, they are.
Okay, all right. So that's HUL making headlines this morning. Let's get to Zomato as well. Zomato is looking at fundraising. We have Nimesh with all the cues. Nimesh, and you were alerting us about this, many weeks back as well, and now finally the fundraising is on.
Oh, absolutely. So finally, they've launched the $1 billion QIP book. The indicative price is 252.62, a nearly 7.5% discount to yesterday's closing price. But do remember, yesterday the stock rallied on the back of the Sensex inclusion. Now, the key important point for this $1 billion fundraising is that after this fundraising, the target is that the FI holding will fall below 50%, and then Zomato is likely to request the regulators to cap the FI limit at 49%. This will be very important as far as Blinkit is concerned. So. Maybe on a pricing front, because of price at a discount, you might see a bit of red on the stock, but it looks like it will recover if there is a very strong demand in the QIP of Zomato.
Given the sort of move that we've seen in Zomato already, there will be a fair amount of demand for this, Nimesh. Very interesting news piece out there, but you're also tracking KEI Industries and GE Vernova.
Yes, so as far as KEI is concerned, it was part of my chatter yesterday as well that the QIP book is likely to launch very soon. They've launched last evening, so KEI is raising close to 2,000 crores, $237 million by QIP. The floor price there is 3,800 rupees per share, which is equivalent to close to 5.5% discount to yesterday's closing price. The equity dilution will be close to 5.8%. It was in the works, now it's finally launched. So the company is raising close to 2,000 crores by QIP. So given the discount, might be the stock will react a bit red in the opening trade. And as far as GNT&D is concerned, again, it was part of my chatter list a few days back. There was an indication that there will be a large block. It is now happening via an OFS. So the promoter entity is selling another 8.3% stake via OFS. The institutional book will open today, and for retail it will open tomorrow. The indicative price there is close to 1,550, a meaningful discount to current price of 1,900. So the book will get built by the retail investors today, as would happen with other OFSs as well. The interesting part is after this particular stake sale, the promoter holding will come to close to 51%. So further supply is unlikely, but there is a large OFS of 8.3% in GET&D today.
Wow, look at the amount of paper supply hitting the market. There's Zomato, KEI, GET&D, NTPC Renewables just closed. Incredible. And all of it being lapped up by the street. Thank you for that, Nimesh. Let's get to Ashmit. The reason we're dialing him this early in the morning is that there could be some good news coming in for telecom companies with respect to some relief on bank guarantees that they're supposed to submit on Spectrum. Ashmit, morning. Good to have you on the show. What are you picking up?
Well, a big relief coming in for the telecom companies, undoubtedly. Every time they buy Spectrum, or they had been buying Spectrum prior to 2022, they were required to submit bank guarantees along with that, which resulted in a liquidity crunch, especially as far as companies are concerned, especially in recent times. Now, to account for that, in 2021, the government had decided that prospectively for all subsequent auctions, there will be no BG or bank guarantee requirement. So 2022, no bank guarantees given. 2024 auctions, again, no bank guarantees given, which gave rise to the question that why give bank guarantees at all, even for spectrum that was acquired pre-2022, and that was the demand that had been put forth. The DOT certainly saw merit in this demand, had formulated a cabinet note, had placed it before the cabinet for approval. Last evening, we understand the cabinet has granted its nod, and this nod is applicable across the sector. This will be a sector-wide relief that bank guarantees will be waived for spectrum that was acquired pre-2022. In terms of what the implications are, it comes as a huge, huge relief for Vodafone Idea. Looking at the position that they are in, looking at the position of the financial crunch, the liquidity crunch that they're looking at, this will come as a huge breather for them. The money that was locked in for bank guarantees for spectrum that they had acquired pre-2022 is likely to now get freed up. This is also something that the likes of Bharti Airtel had been pitching for and will certainly benefit them as well. So clearly, a big relief coming in with the government approving that bank guarantee waiver.
Okay, thank you very much for that. Big relief coming in for the likes of Vodafone Idea. Vamakshi is now with us for the latest on the October passenger air traffic and what the numbers show, and even on BHEL Hitachi Energy. Vamakshi.
Well, good morning, Rima. Let me first start off with Indigo. The stock will be in focus because in the month of October, India's domestic air passenger traffic grew to 1.36 crores as compared to 1.26 crores that we saw in the same month last year. This is an uptick of 5.3%. And out of that, Indigo catered to nearly 86.4 lakh passengers. And with that, its market share stood at 63.3%. Now, I'm going with the green for this counter because the market share for the company seems to have improved from 63% that we saw in September to 63.3%. But apart from that, BHEL and Hitachi Energy, both of these counters are expected to see very strong trading session, and that is because a consortium of both of these companies has received an order from Power Grid. Now, this order is to design and execute 800 kV, 6,000 megawatt and 1,200 kilometers of HVDC terminal stations, which will be transmitting renewable energy from Khavda in Gujarat to Nagpur in Maharashtra. Now, this project is expected to be executed by 2029. Now, going with the green for both of these counters because generally HVDC projects are expected to be huge in terms of the contract value, and therefore bodes well for both of these companies.
All right, we take that point. Vamakshi, thanks a lot for that. Let's go across to Vivek as well. He's watching a couple of stocks. Vivek, what do you have on your list?
Well, good morning. Two stocks on the radar. First one is Power Grid. Now the company has emerged as a successful bidder under the tariff-based competitive bidding process to establish an interstate transmission system. This is for a power evacuation project in Rajasthan. This particular project will be done via the BOOT, which is the Build, Own, Operate and Transfer basis. The second stock on the radar is Premier Energies. Again, the company has received multiple orders and the total worth of these orders is over 1,080 crore. The order has been received from two independent power producers as well as one other customer that the company has not specified. So in this particular order win, when you're talking about the breakup, solar modules is at 964 crore, solar cells at 123 crore. Remember, at the end of Q2, the company's total order book stood at well over 6,200 crore.
All right, Vivek, thank you so much for that. In fact, on that note, we'll thank our entire team for stopping by and giving us their entire list of stocks that they are tracking this morning. In fact, in case you missed it, let's give you a recap of the same. Stocks with positive news flow. We have HUL, the telecom companies. We have Interglobe Aviation, BHEL, Hitachi Energy, Power Grid and Premier Energies. Stocks with negative news flow are the ones which are supplying paper, Zomato, GE Vernova and KEI Industries. Let's go across to Manisha Gupta now for a quick roundup of all the action from the commodity market overnight. Manisha, some cool off in crude?
Oh, yes, it is. And it is because of the reports of Israel-Hezbollah ceasefire agreement. So, yes, we've seen the strength in US dollar and the ceasefire agreement. Both of these things work in sense of bearishness in case of any of these commodities. Though, of course, in the Asian markets right now, the markets are reacting to US plans to raise tariffs by additional 10% on China, 25% on Mexico and Canada goods as well. So we are stuck somewhere in the middle. But yes, most of these commodities still holding on the lower side of the range. Crude oil prices fell 3% overnight. We also hear that the OPEC and allies meeting on 1st of December is going to be an online meeting, and there could be production cuts in place on 1st of Jan as well. So that means there is not going to be more production coming in from OPEC into the international market. The other area which saw huge profit taking has been the precious metal prices. As the safe haven buying kind of eased, we saw gold prices decline 3.5%, silver fell 4%, platinum 3%, palladium 5%. So, well, yes, there was a complete sell-off in the precious metal markets overnight. And same goes for, in some sense, for the base metal prices also. 0.5% to 1.5% of a cut overnight is what we are seeing in industrial metals too.
All right, so some cool off in the commodity complex today. Thank you, Manisha, for that quick wrap up. We will take a break on that note, come back on the other side, and we'll have Amnish Agarwal of Prabhudas Leather joining in. We'll get a couple of fundamental stock ideas going with him. Also in a bit, we chat with Karthik Narayan of Teenlease Services to talk about the employment outlook for the second half of this year.